Money Talk with Melanie features lively discussions of a wide range of global, domestic, and kitchen table financial topics. Guest interviews include entrepreneurs, CEOs, and politicos who are experts in their fields. Be sure to listen up. This is important because it's your money. Your money. Be sure to listen to Money Talk with Melanie. Money Talk with Melanie. Thursdays, 7 to 9 p.m. Eastern Time on 98.7 The Coast.
Good evening and welcome to another edition of Money Talk with Melanie. I'm your host, Melanie Collette, and this is Money Talk with Melanie. I'm very excited to be back behind the mic this evening, broadcasting live from beautiful Wildwood, New Jersey, here on 98.7 The Coast. I apologize, ladies and gentlemen, for not being here last week. I felt ill at the last minute. I tell you, 2022 has been just a cruddy year so far. I've been sick more than I've been well. But I don't want to talk about that. I'm excited to be back. And our guests this evening for the first hour are cash flow expert Chris Miles of Money Ripples. He's going to talk to us about infinite banking. Don't know what that is, nor did I. And that's why I'm having him on the show. So stick around for the first hour, and we're going to chat with Chris Miles of Money Ripples, and he's going to talk to us about that. And then we're going to switch gears for the second hour and talk to Mike Fitzpatrick of NCX Group. He is a cybersecurity expert, and he's been on the show before. He's a returning guest. And I thought with the impending talk in the news about Russia possibly attacking the United States and anyone else that Vladimir Putin considers to be an enemy with cyber security attacks or any kind of cyber attacks. FYI, just a little note. Did you know that cyber attack was one word? I did not. My guest, Mike Fitzpatrick, sent me a video, and the thumbnail of the video had the word cyber attack in it. And it was one word. Now, I can tell you something about Mike Fitzpatrick as a cybersecurity expert and someone who is always on point and just does things very well and very right. I was really surprised that there would be a typo in the thumbnail of his video, right? And I was like, that's strange. But as I was typing the title, and me being a bit of a nerd myself and having a grammar checker on my computer because I like to look like, you know, an intelligent person that doesn't, you know, have grammatical errors in her stuff, I noticed that the word cyber attack as one word did not get flagged. And it was cyber attack as one word. Weird, right? Just thought I'd share that little tidbit because I could not possibly be the only person who did not know that. Cyber attack is one word. Just very strange. Just thought I'd share the knowledge. And anyway, just thought it was really weird. Anyhow, a little Melanie Media recap as I've been gone for 2 weeks, but all this stuff happened this week, right? So on Monday, I did Newsmax, American Agenda. And this, of course, was the day after the Oscars. So they, of course, had to ask me about the smack that went around the world about Will Smith smacking Chris Rock. And it was a problem. And I said, you know, of course, in my opinion, you know, Will Smith should have been arrested because anyone else would have been arrested. Like, you don't get to smack a person because you're mad over words. Talk about privilege. Now, on the other side of that, I did like a little, you know, impromptu, unofficial survey of a lot of my male friends. And they were like, yeah, talk about my mama, talk about my woman. You're not going to get smacked. You're going to get punched. And there's going to be a whole problem. So there was that too, which I don't agree with. Like, guys, can't we be mature? Now, none of my mature male friends are going to say that in public, but deep down they're like, I get why he got punched. So it's just very conflicting messages that I got. Also, last Saturday, I had the privilege of seeing Dr. Ben Carson speak, and I met him in person. So that was just like wow. Now, one of the things that Dr. Ben Carson said in his speech, he talked about courage, and he talked about a couple of instances where he had courage. What I thought was one thing, sometimes people who are geniuses, which he's a certified genius, and how you know that you're speaking to a person who's way out of your like realm of thinking, like your realm of smarts. You know, he's talking about a brain surgery that he found to be particularly difficult. And I thought to myself, oh, Dr. Ben Carson finds this particular brain surgery difficult, as opposed to the what? The easy brain surgeries, like the brain surgeries that are, you know, a layup, like what? But it was just an absolute thrill to meet Dr. Ben Carson in person and to shake his hand. So that was just kind of like the highlight of my weekend. And as some of you may know who follow me on social media, and if you don't, why don't you? At Money Talk Mel on Twitter, at Money Talk with Melanie on Facebook, and at Melanie T. Collette on Instagram. I'm also part of an organization called Project 21, which is a leg of the National Center for Public Policy Research, and I'm most recently featured in one of their press releases that actually just came out today, where I again was asked about the whole the Will Smith situation, but I was also asked about the NFL and them kind of expanding on the Rooney Rule. They're expanding it to women and insisting that women be hired and trained in the NFL, and that more minorities are hired. And they asked my thoughts on that on a recent blog post. So you can go to Project 21's social media and read my comments on that, or of course follow me on any of my social media and check out any of my comments about that. I'm sure that if you lean left, you will find them quite incendiary. So if you lean right, you will probably just agree. If you lean left, you will probably say, what is she talking about? Long story short, we already have laws on the book. It's weird. Like, we already have laws on the books that say that you cannot illegally, you can't illegally not hire somebody due to their race or gender. Those laws are already on the books. And if you're not familiar with the Rooney Rule, the current Rooney Rule in the NFL says that you have to interview, it insists that you have to interview black people for positions. You have to. You must. What they want to do is expand it and say now you have to hire black folks and women, and there has to be a training program so that they gain experience. That does not sound like a good look to me. And it's kind of insulting. And what seems to be left out of that conversation, just to me, just one woman's opinion, is how does this benefit the NFL? Now, if you're saying, if the argument is, and I have not seen this argument anywhere, if the argument is that apples to apples, in other words, you got a green apple and a red apple, and both apples have the same exact NFL statistics. They're identical. And every single time the green apple keeps getting picked and the red apple doesn't, then yes, that is problematic. I would agree with that. But if you're saying that the green apple always has way better statistics than the red apple, and that's why the green apple keeps getting picked, then that is not problematic. That's just the green apple being better. So And the only argument that I keep seeing about the Rooney Rule are the numbers are bad. There's not enough black people. Why don't we have more black people? Why don't we have more women? But maybe there aren't. And how do women add to the numerical value, the cash value? Because the NFL is a business. How does it add to the color green for the NFL? That's my question. Because for businesses, you need to add to the cash value of a business. That's the way businesses work. I know that sounds mean, but that's literally the way it works. The NFL is not a charity. It's a business. So I don't, you need to connect those dots there for me. And I'm not saying that there isn't a cash value for women to be added to the NFL and that women can't do a good job all throughout the NFL administratively in different roles and et cetera, or black folks. But what I'm saying is let's do that. Let's prove that. And that's what we should be talking about. We shouldn't just be talking about skin color and melanin, because there's no, you can't, that's not a quantifiable attribute. That there's no statistics that say that particular attribute adds to the NFL. At least not any research that I've seen. Just saying. You're listening to Money Talk with Melanie. Our first guest is Chris Miles of Money Ripples. We're going to talk to him about infinite banking, and we'll be back in a few moments.
Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. Our first guest this evening is cash flow expert Chris Miles of Money Ripples. He's going to talk to us this evening about infinite banking. He is the cash flow expert and anti-financial advisor and a leading authority teaching entrepreneurs and professionals how to get their money working for them today. He's an author, podcast host of the Chris Miles Money Show, has been featured in U.S. News, CNN Money, Entrepreneurs on Fire, Bigger Pockets, and has a proven reputation with his company Money Ripples, getting his clients fast financial results. In fact, his personal clients have increased their cash flow by over $250 million in the last 11 years. I'm very excited to have him on Money Talk with Melanie this evening. And without further ado, Mr. Chris Miles.
Hey, Melanie, it's great to be here.
It's great to have you on the show this evening. Is there anything that I left out of your bio that you'd like the audience to know?
Well, I did get fifth place in my third grade spelling bee, and that was pretty cool.
That is pretty good. Hey, did you know that Cyberattack was one word? Were you aware of this? Since you're a spelling bee champion?
Oh, my goodness, I did not. See, I stopped at third grade. I got depressed, and, and rest is history.
Second hour, I have a cybersecurity expert on, and I discovered when I was doing show prep today that Cyberattack was one word, and it just has me shook for the whole day.
That's true. I guess when I was in third grade, it was back in the 80s, cybersecurity was not even a thing, I don't think.
Right?
Cybersecurity was war games with Matthew Broderick.
Right, same. I'm with you. I'm absolutely with you. Okay, so let's talk infinite banking. I'm very excited about this. I was kind of excited when I picked this topic, when I invited you on the show, and then when I did show prep and was doing research for the show. Now I'm super excited. And I'm also why am I not doing this?
Yeah.
So tell the audience what infinite banking even is, what that phrase means.
Well, it's so tough because you look it up, you Google or you YouTube it, and you get a varying amount of opinions on it, right? You get people that either love it, or you get people like the Dave Ramseys of the world that hate it.
Right.
And and there's good reason for that too, because the truth is that the infinite banking, right? And I don't get to the description of this, but just know that there's a variety of ways that people talk about using it. And I think there's good ways and bad ways of using it. And so, simply put, infinite banking is a way where, for those that are very debt adverse, if you go from the traditional way of how infinite banking has been taught, and the way I'm not as big of a fan of, they'll say, hey, if you're going to use your own money, one of the best ways to do that is instead of putting your money in a savings account, you can create this tax-free supercharged savings account by setting up this whole life insurance policy, which is different than term insurance. Obviously, term insurance is just a death benefit. You only pay for it. You only get paid when you die. Whole life insurance has what's called a cash value component, a savings, a tax-free savings, kind of like Roth IRAs in a way.
Right. Same
taxation, right? It grows tax-free, comes out tax-free.
Right.
But it's part of the life insurance policy. So you have a death benefit, but you also have this living benefit called this cash value, which is this tax-free savings account.
Right.
Now the whole thing about it is using this money because you can actually get a line of credit against it through the insurance company or through a bank. You can actually borrow against this policy to use for whatever the heck you want. So what a lot of people will teach traditionally, they'll say, well, if you've got a house and you want to be debt-free, rather than just trying to pay cash for it, build up this policy to then borrow from it, pay off the house, and then make the payment to yourself instead of the bank, is what they'll say, right? Mm-hmm. They'll say, pay it back, and you'll build up your cash that way, and then you won't have anything, you basically are not owing money or debt to the bank.
Right. It's you're like your own financier, so you're your own bank.
That's right. That's why they have people out there talking about like be your own banker and stuff, and and all that kind of all of those kind of things out there about it. Now that's the traditional way of using it. Now the way I use it is what I refer to as max return or max ROI infinite banking, because the problem with this is this. I remember. So my story is 20 years ago. I was a financial advisor. I was doing the mainstream thing. I was anti-whole life insurance. I was all about the stock market. That was the way you made money. Well, 2006, I had a friend that was in real estate investing that told me and helped me point out that none of my clients were financially free, nor were any financial advisor I knew in existence financially free either. When I say financially free, I don't mean like they could retire off of their business, right? Because their business would pay them renewals every year.
Right.
I'm talking about financial advisors that were investing in mutual funds that could retire themselves because they couldn't. None of them could. And that's why I found out that financial advising doesn't work. It's broken. So obviously I started getting into, real estate investing and things like that. I was actually able to become financially independent when I was 28, almost 29. And while I was learning this stuff, and that's a whole other topic in itself, while I was learning this, they were all talking about infinite banking. And they were saying, yeah, you could buy your cars with this, and then you just pay yourself back. So I bought one of these policies from a guy, and I remember asking him, I said, hey, can I do things to make this give me a better return? And the guy said, no, you can't. So I took his word for it, thinking he knew best. And I was like, hey, I was anti-whole life just a year ago. I'll take your word on this. Well, 2008 hit. And we all know that the recession was not an easy thing to go through.
Right.
Well, I didn't have the money to keep paying these expensive premiums. And so when I said, what are my options? They said, well, you don't have any cash in here, so you can't borrow from it to pay your premiums. So it looks like it's gone. Understand, I paid $25,000 into these policies and
Wait a
lost
minute.
everything.
Stop. Okay, I have questions.
Yeah.
Okay. Now, full disclosure, I'm a licensed insurance broker as well. So, are you saying that you have more than one policy that you're investing in?
Yeah, I ended up buying two.
How did
two
you
policies about? Yeah.
How are you doing that? Because my understanding is you are not allowed to have more than one.
Oh no, you can have as many as you want as long as you don't exceed the total death benefit that you're going to qualify for.
Oh,
so no,
really?
No, you can. Oh yeah, people can have dozens. I mean, it's ridiculous to have dozens, in my opinion. But yeah, you can have a lot of policies as long as the death benefit supports it. So, say for example, you're in your 40s, you can generally have about 20 times your annual gross income in death benefit. So, if someone makes $100,000 a year, you could get $2 million of death benefit. So, if you bought a policy that was only a $250,000 death benefit, you could technically buy 8 of those before the insurance company would say, "Sorry, you need to make more money before we give you more."
Okay, I've literally never seen that. And how many times have I renewed my license? I do not believe I've ever read that. Because I feel like I would remember that.
Oh, that's the thing is that, I mean, they kind of dumb it down for us. I mean, I've taken the continuing education for the last 20 years, right?
Right, that's what I'm saying. You know how it is.
They never tell you
that. No.
That's right. No, they don't. And that's the problem is that, I mean, even the stuff I'm talking about right now, this is not taught. In fact, in many insurance companies' cases, they actually discourage this because it does manipulate the system when you use it correctly. Because when you start getting a much better return than the typical policy, like the ones I did where all of my money in these whole life policies were going to insurance costs in the first 2 years, and then by year 3, I had a couple $100. They said, sorry, if you don't pay the premium, you're going to lose it. And
right.
So I had $25,000 put in those policies that now was gone. And it was like the most expensive term insurance ever. If you think about it that way, it was a waste.
Got it.
But
okay.
I found out later you could design it differently where you actually have cash in there from day one. And it builds much faster, and you get a much better return on it than those traditional ones. And by the way, those traditional ones, like the ones I bought, the ones that I end up losing, that's why the Dave Ramseys and the Susie Ormans of the world hate them. Because they'll say they're a waste of money because they just look at all those big costs and how it takes you about 15 to 17 years to break even before you have your money back.
Okay. And, I mean, not for nothing. I think that, in my opinion, just having, explored the Dave Ramseys and Susie Ormans of the world, I don't think that they're bad. Mm-hmm. I just think that they are for a certain kind of person. I think that they're very conservative, and I think that they are if you want to do things the exact right way, they're like how I teach my high school students. Like I teach my high school students to do things the absolute right way. Mm-hmm. If that makes sense. Like the 100%.
It's like remedial.
Exactly. Like the 100% pure, this is the absolute right way to do it. Like ideally, you don't want to go into any debt. That is the absolute ideal way to do things, a la Dave Ramsey. Right? Mm-hmm. So, now is that entirely realistic? Probably not.
No, it's not. That's the problem. I mean, now understand Dave Ramsey, right? I mean, he's bless his heart. He's a good man.
Absolutely, I agree. Right.
I think he's done a lot of good in the world, but his audience are people that are making about $40,000 a year or less. Right? Mm-hmm. He's talking to the person that's just starting out in life, like you said, like it's someone who's like a high school class. It's like remedial finance. It's even the class before Finance 101. He's just teaching you really basic stuff. And when it comes to having a little bit of emergency fund, getting your debts and your expenses under control and make sure you have a good spending plan, he's great.
Right. And
anything
people who really don't know how to do anything with their money.
That's right.
Right. I agree. Now, this is kind of what you're talking about is a bit more advanced, and now you're talking about getting to a point where you're really being strategic with your money, where you have, at least this is what I'm gathering, you've got your 6 months savings together. You've got your, you know what I'm saying? You've got your budget together. You've done your 50, 30, 20. You've got your budget going already. And now you're looking at, okay, how can I be strategic with my savings and investing strategies?
That's right.
Let me think about
one thing
infinite
those
banking.
guys are all missing. Yeah, because that's the one thing all those guys are missing is that they're good at getting you just the basics, but they are not good at getting you to be financially free. And the reason I know that is because all of Dave Ramsey's poster children come to me later saying, hey, listen, I paid off all my debts, and some of them even paid off their mortgages, and I've saved up a bunch of money in the stock market, but I realized it's not enough. And even my financial advisor says, keep putting more money in, and hopefully by my 60s, 70s, or 80s, I'll finally be there. And I've been packing money away.
Well, right.
How am I going to get there?
You get to a point where money's just sitting around, and then now what?
Exactly, and that's who we usually end up talking to. It's got to be that next step towards freedom. Debt free does not mean freedom, and same thing with the strategy of infinite banking. As you really do get a good solid foundation, and you're getting started, and you're just starting to really save some money. Maybe you're at the point where you're saying maybe I can start investing. That's when this could be a good strategy because this one I use this really differently. I use this as a replacement of like a 401k savings. I use this as a replacement for even, in many cases, my own personal bank savings account. Because remember, the bank savings account, when you save money in there, you're earning 0.nothing%, and then you get taxed on 0.nothing%.
Oh, and listen, if you have been paying attention to what's going on in the news and the next budget that's coming out, the government is about to try to tax you on earnings that you haven't made yet. Money that you haven't made on your house yet. Money that hasn't been earned in your bank account yet. Like, what? What are they doing? Yeah, it's crazy. So
it is.
You better.
One of the few places.
Right. You better figure out how to protect your money.
Yeah, and there's no such thing as in the United States. In Canada, there is a tax-free savings account, but in the U.S., there's no such thing as just a tax-free savings account, right? It's really, that's what life insurance does. It creates that savings account that you can access whenever you want. And here's what's nice, is that when I have people pay into these policies, year one is always, really the first 2 years are the most expensive. This is like, if people say, what's the negative about these whole life policies? Because some people say, it almost sounds too good to be true. And the truth is, it's not that amazing. I mean, it is, but it's not. Like, it's not like you're going to make 5,000% return in a year, right? It's not like something super sexy from an investing standpoint.
Right.
It's really like a savings account. But again, rather than losing all of your money to insurance costs in those first 2 years, we do it to where in the first year, only 80%, reverse that. 20% goes to cost, while 80% actually goes to cash you can utilize from day one. So if you put in $10,000, you have $8,000 you can access. And then by year two, even less comes out. So now you've got about, at that point, $17,000 in there after putting in the next $10,000. So if you put in $20,000, you got access to about $17,000 of that money. And by the time you hit year 5, you got about $50,000 or so in there already. And it's growing by more what you had. It's almost like free insurance by that point. So the cool thing is, you get the death benefit, but even better, and a lot of my clients, some of them were saying, I really don't need a big death benefit, but I want a place where, like you were saying, one, I can protect my money from taxes where they cannot touch it. And then two, in most states, it's 100% protected from lawsuits and creditors. So even if you get sued and they win, that's the money they can't touch. They can get to your bank savings account. They can get to your IRAs. 401k is a little tougher for them to get to, but they can get to almost anything, almost any money you have anywhere. Yes, even your Bitcoin. They can get to that.
Yep.
But they cannot get to this life insurance cash value that's sitting there. And the cool thing is, even if you're trying to qualify for loans, when they say, hey, how much do you have in savings?
That doesn't count.
Like if you're trying to get a mortgage, this money actually counts as your cash reserves.
Right.
So in many cases, when I'm going and buying rental properties and such, they'll say, well, all right, show us your liquid savings. And I was like, great, I'll just give you my statement right here, my real-time statement of my life insurance. And they say, check, moving on. And so I mean, that's the cool thing just from a short-term perspective. Here's the real magic that goes beyond that, is that I can get this money to pay me twice. Because here's what's happening. That money is already growing in there tax-free. It's earning about a 4 or 5% tax-free return. Again, like I said, by itself, it's not that sexy.
Mm-hmm.
But what I can do is I can get a bank line of credit against it for 3%, for as low as 3% right now. So if I'm earning 5% tax-free on that money, that's compounding, and then I get a line of credit against it, just like someone who gets a home equity line of credit. You just get a line of credit against it. You don't actually pull out your money. Your money stays in there. The whole amount is in there. But then if I get this 3% loan against it, I now make this 2% spread on my money, and then I go and invest it and buy things like real estate where I might make 10, 12+% a year on that.
Okay, that is beautiful.
So let me kind of break it down.
We got like 2 minutes. But go ahead. And I'm probably going to ask you to reiterate that when you come back. Go ahead.
Yeah. We'll talk more about it after the break. So take an example. Say that you've built up $100,000 in this cash value of this policy. Now you want to go and borrow $50,000. Now normally, if you did that, if a savings account, you pull out $50,000, you're left with $50,000, and that's what's earning interest. Even worse, you pull out all the money out of a savings account, and you're not earning any interest, right? You have to rebuild it slowly back up as you make returns from your investments. So say that I borrow $50,000. The thing is, my money, the $100,000, is still earning 4 or 5%. So say I'm earning 5%, I'm making $5,000 in income that year. But that $50,000, if they're only charging me 3%, it only costs me $1,500. So now what happens is I've got that, that $3,500 I made in the insurance policy more than what it cost me on the loan, and that $50,000, say I go and I put that as a down payment on my rental property, that makes me $500 a month. That's $6,000 a year. Guess what happened? I just made off that $50,000 $9,500.
Mm-hmm.
And that's, if you think about that, just how big that is. $9,500 on $50,000 is almost a 20% rate of return on my money.
Okay,
that's how big of a difference that is.
I completely got that. And on the other side of the break, you're going to explain to me how that's legal, how it's not a scam, and how I'm not going to lose my health and life license by helping a client do that. You're listening to Money Talk with Melanie. My guest this hour is Chris Miles from Money Ripples. We'll be right back on the other side of the break.
This is important because it's your money. Your money. Money Talk with Melanie. Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. Our guest this hour is Chris Miles of Money Ripples, and he's talking to us about infinite banking. And he was explaining the magical part of infinite banking. And I want to make sure that I got this down. That the magical part is that you can borrow against the money that's in your policy. So, while the money is in your policy and you are earning interest on that money, you can also borrow against it at a lower interest rate. Use that money to make another investment, earn interest, earn money on that investment. That sounds, to me, a lot like double dipping.
That's exactly what I call it.
Is that exactly what they call it? Because that's what it sounds like. Now, I'm trying to figure out the legality of that. Is that just a loophole that no one's discovered yet? Like, I can't believe that somebody hasn't said, wow, we can't let the wealthy do that. Because it sounds like something that someone would have tried to stop wealthy people from doing, that someone would have screamed it's unfair, and that people with money shouldn't be allowed to do. That's what I'm just saying. Now, I just want to be clear, not me. I'm not a person who would say that, but I know that there are people who would say that.
Oh, of course. Well, understand this, that's a great point. Understand this, is that about half of the politicians, when I talk about like House of Representatives and the Senate,
sure,
the politicians that you vote into office to make these laws, remember, they're the ones that made these laws. And why did they make these laws? Because they make too much money to even contribute to a Roth IRA. Once you make too much money, you can't ever contribute to a Roth. And there's like the backdoor Roth, but they're trying to get rid of that even,
Sure.
But most of these politicians are, have a business and or they have real estate. That's one thing that they're doing. But many of them have been saving in these policies for decades. I mean, this is nothing new. I mean, even banks. Banks, by the way, also buy life insurance policies. And in fact, I remember during the last recession, banks like Washington Mutual, they were putting 42% of their cash reserves inside life insurance to store their money. We had Wells Fargo was about 22%. This is not a new concept. Companies and businesses have been doing this forever. GE, this is how they replenish their pensions, because they would use that cash value to pay the people's pensions, and then when they died, the death benefit would go and refill the pension fund.
I knew the answer. I knew the answer to this question when I asked it. You know that, right? I knew what the answer was going to be when I asked the question. I knew that's what the answer was going to be, because they've been doing it.
They've been doing it. It's nothing new. It's definitely nothing new at all. I mean, the whole life has been around for a couple hundred years in its current form, right? It was the first place that people went to. All these new things like universal life. I mean, that came out more around the 80s, when people said, hey, we could buy term invested difference, and the insurance companies found a way to manipulate that by saying, hey, universal life is basically just buy term invested difference because we're just getting renewable term every year and, and putting a cash value component to it so they can kind of keep all their money with us versus trying to put it into the, their mutual funds and things like that. This stuff is, all that stuff and the bells and whistles they've added lately is just nothing. It's all stuff that they've done in the last few decades, but whole life has been around forever. It's been going on a long time.
Well,
and many people will... Mm-hmm.
This is true, but I think that this is, and I'm not asking you to agree or disagree on this policy point per se, but this is why when, in my opinion, when policymakers, are like, oh, tax the wealthy and the wealthy should pay their fair share and blah, blah, blah. I'm like, the wealthy are situated in a way where they are going to move their money. First of all,
yep,
they have access to knowledge that common folk typically don't have, like infinite banking that they've known about for a while. But like thanks to technology and the internet and podcasts and things like this, now, regular people are getting access to this kind of information. But these are things that the wealthy have known about for years. And what the wealthy are going to do is just move their money.
Yep.
They're just going to move it around and they're going to be fine. You know who's not going to be fine? Middle class people who are out working right now and know nothing of this.
Exactly.
They're not going to be okay. Like that's that's the problem. Now, let me ask you. Okay, so you said that the interest rate, the typical interest rate on an infinite banking policy, does that kind of go parallel to the S&P, like Standard & Poor's? Does that stay kind of stable around 4% and 5%, or how does that work?
It tends to follow interest rates more. So the S&P 500, the good news is it does not follow that. So people are always worried, what about market fluctuations in the stock market? Doesn't affect it at all. However, and here's the thing you want to do too. When you're looking at insurance companies, you don't want to go with companies that are stock owned. Those like the state farms, right? The things that you can find on the stock market. Those ones, when they pay dividends, they're paying their dividends to investors.
Right.
You don't get paid as much of the dividend from your insurance policy. Where with mutual companies, and you might have heard companies like Mass Mutual,
right?
Penn Mutual, companies like that, right? Guardian, some of those big ones, Northwestern Mutual, New York Life. Those are all what's called mutual companies. And I like to compare them like credit unions. Banks are the ones where they have their own stockholders, but credit unions brag they'll pay you, 0.05% more than the bank because you're a member of the credit union, right? So the members are the ones that own it. That's why they tell you can vote for the board members, all that kind of stuff. Mutual companies are the same way, and they pay the profits back to the whole life insurance policy owners. So the cool thing is, one, they already budget a minimum return just for returning your premium. Now, they just changed the rules. It used to be 4% was a minimum. Now it could be as low as 2%, although most companies I work with, it's usually at least 3 to 3.75% is the minimum right now. That's a contractual minimum. That's if they don't pay a dividend. That's just if you get paid the guarantee.
Okay.
But if they're profitable as a company, which you get paid on, and their portfolio that they invest with, which is typically buying treasuries and bonds, stuff that are tied to interest rates, that's the thing where you get paid the rest. So that's where like a lot of the companies I use usually pay at least 5.5% to 6% right now in the lowest interest rate environment we've seen pretty much ever. Now we're just starting to see interest rates start to climb, and that's a good thing if you're a policyholder because every year they tell you what the dividend rate's going to be that next year. So if we start seeing all these interest rates go up, and people say, "Well, how's that going to affect it?"
I was about to ask you that. I was just about to ask that question. Go ahead.
Yeah, because if you would have gone back to the early 2000s or the 90s, it was very common to get a dividend right around 9, 10+% in a whole life policy. now you don't hear those kind of numbers because we've been at such a low rate for so long.
Sure.
Right, ever since the last recession.
Right.
But it can definitely go higher than where it is. It could go lower too. Don't get me wrong. It can still go lower, but there's always at least a guarantee. There's that that little safety net there. Here's the second guarantee I would talk about too, because people will say, well, what about the insurance company? What if they go under? Now, remember, in the Great Depression, very few insurance companies actually went out of business, while 50% of banks failed. The reason that happens, and just like the last recession too, banks fail because they can over-leverage their money, right? They can go into more debt than they have in cash.
Mm-hmm.
So they can loan out 10 times, or in the case of those big banks we bailed out last time, they got Congress to approve 40 times the money. So if they had, say you put $100,000 in savings in their bank, they can loan out $4 million. So if people don't pay them back, they're in trouble, right? Insurance companies can't do that stuff. So they can't be financially irresponsible like those banks were. And also, if they do fail, all insurance companies are required to buy what's called reinsurance.
Right.
Reinsurance is kind of like our own. It's really just like FDIC, where they say they protect your money. Just so you know, FDIC can only cover 2.5% of bank balances. So,
excuse
me, 10% of 2.5%. If you look it up now, it might vary between 2.4, 2.7%. But if you look at the total reserves in the FDIC, what they can cover, compared to how much is in actual banks, people's savings accounts, they can really only cover about 2.5%.
Our government's a complete clown show.
I know.
They're a bunch of clowns. It's a clown show. Because you know what? So on the door of every bank, they tell their customers, we got you for $250,000.
That's right.
Pop.
FDIC insured.
$250,000. If you got $250,000 in this bank, we got you. That's what it says on the door, right? So you're thinking, I got $200,000 in the bank. I'm cool if if it gets lost, if something happens. But they do not have you.
That's exactly it. And if the banks are over-leveraged and then everything goes bad, or people start going on a run on the bank and trying to get their money out, and then those banks start failing, and then the FDIC trying to go in to step in, and 10% banks are failing, they're going to say, hey, you've got to give us some time. We got to print more money for you so that you create more inflation, and then we can pay you back.
That must be what the small print says. We actually, we do not have you in the event that that must be what that tiny little print says. That's insane.
But we don't have. So if you think about it, your savings account is actually not safe. It's not the safest place to be. Where the whole life policies, they have reinsurance companies back them up, which are like worldwide banks.
Right.
And insurance companies, they back them up. So in case they happen to fail, which very few ever do, but if they ever do, they ensure that they can cover your cash value that's in there and your death benefit for life. So they make sure. So they'll cover it until either somebody else, either they cover it for life, or another insurance company will come in and buy it up. But either way, they'll be the bridge to make sure that your policy is protected, that your cash that's in there is protected, and the death benefit too.
True. Now, when you borrow from your whole life policy, how do you pay it back? Like, do they send you a coupon book? Like, what's the process like for paying it back? It's not a normal process like when you get a normal loan, right?
That's right. Yeah, one thing to understand about these loans, they're private. They're not on your credit report. They're done completely privately with either the insurance company or with a specialized bank. And sometimes even your own bank might even do that. I've had clients go and ask their banks or credit unions, say, hey, I've got cash in here. It's in a whole life policy, so it's guaranteed never to lose money. Will you give me a line of credit against it? And sometimes they do. I had somebody go to their bank, and their credit union said, we'll do it for 3.75%. Now, if you do it through a bank, like your normal bank, they might put on your credit report. But normally that's not the case. Normally what it is, especially if it's through the insurance company, it's totally private, under the table. And if it's with the insurance company, you can pay it back however, whenever you want. The deadline to pay it back is your death. And the way that you pay it back then is you pay it back with your death benefit. So say that you have $1 million death benefit, and you borrowed, even if you're using it to live on or blow or live La Vida Loca, whatever you want to do, you borrowed $500,000 out of it because you said, hey, I don't want to give my kids any money anyways. Well, guess what? That $500,000 gets paid off by the death benefit, and then the other $500,000 pays to your family tax-free.
Oh, that's pretty beautiful. That's pretty good. That's not bad. That's not bad at all.
No, it's not.
Okay, so let me ask you this. So you would think, or maybe someone might think, well, why not just use an indexed universal life policy instead of a whole life policy? So you probably give a simplified explanation for the difference between an indexed universal life and a regular whole life policy. I think I failed that question like 12 times on the test. Give a simplified explanation for the difference.
Yeah, exactly. Yeah, it's funny because when I was a traditional advisor, I actually was a big fan of using universal life. I either sold term or I sold universal life because at least you can make market returns or whatever, right?
Sure, right.
But as I taught other agents about, especially like index universal life, which it wasn't popular back in the early 2000s. It got more popular in the last 10 years when the market went up 13 years in a row. Mm-hmm. Well, index universal life, the thing that's different about that is that it's actually term insurance, right? It has a term insurance chassis. It's like, I tell people it's the difference between a Toyota Corolla and a Lexus. If you think that term insurance is like the Toyota Corolla and you're just paying double the price for the same exact car, but you put a Lexus logo on it, that's really what an index universal life is. Because it's just, any kind of universal life is just term insurance that renews every year. The insurance costs get more expensive each and every year.
Yeah.
So they do go up. It's the opposite of whole life, where whole life costs actually start off a little expensive
and go down.
But then go down. Right. It's a different way it works. So when I start training other agents about index universal life, I started to realize, there's some dangers here that may not even give us some certainties. One is, of course, there's increasing costs. If the stock market doesn't do well, and the cool thing is at least you don't get negative returns with an index universal life. That's a variable universal life that I sold in the beginning, and those were bad because when the market goes down, you lose money big time. But index universal life can still lose money, which is why many banks won't give lines of credit against them because they know it's not guaranteed like whole life. Right. So I actually had a client where they said, hey, I've got this policy with this company. I said, well, let's see if we can get you a line of credit. Both banks refused. They said, nope, it's universal life. We don't lend on universal life because they're risky.
Yeah, anything can happen. Right.
So if the market smiles on you the right way, like it did the last 13 years in a row, it can beat whole life. The problem is that if it's not designed properly, and the truth is that the market, if it goes down, so buying one right now would be the worst time to buy an index universal life. Mm-hmm. If the market goes down, you don't make any money really in those things. In fact, you could even start losing money. And every time I see a policy that they project out, like once they have reality, not from their projections from the insurance guy, but once they've been into it for a few years and then they redo those projections, every time somebody gets in their 60s, 70s, or 80s, it runs out of money. And they have to either pay more into it to keep it alive so they still have a death benefit. Where you don't have that problem with whole life. Whole life, I can have somebody stop paying into it after 7 years and be done.
Right.
So it's way different.
And whole life kind of lives forever.
It does. It's guaranteed to be there forever. If you design it right, of course, but yeah, even if you keep paying, some people design it to pay into it forever, your whole life. But the misconception is you can actually have it be paid up early to where you stop paying into it and just let it go, without having to pay into it forever.
Okay. So what kind of, okay, it's 7:54. Okay. I should probably ask. We got 4 minutes? Okay, cool. All right. So what kind of broker, what kind of person does an average customer look for when they're shopping around for an insurance policy, like not just a regular broker, but they want an insurance broker or agent that's going to help them be strategic with their policy. Like they're not looking for a regular policy, but they're looking to do some strategic investing with their life insurance policy. Like they're looking for a Chris Miles type dude or type girl or, it's 2022, so I guess I should say type person. I don't want to offend anyone.
Don't exclude anybody, right?
I don't. I mean, technically, don't really. I shouldn't say I don't care, but I don't. Good. A person who's licensed. What kind of person who's licensed who can strategically help you invest? What kind of person do you look for?
If you're looking to and not just buy a policy, but you're looking to figure out how to use it creatively.
Yes.
Find somebody who's doing it themselves. You find someone who's actually done that and specializes in that. Because you're right. The truth is, most insurance agents have no clue about, like, for example, real estate investing. Most are just doing their thing. They're just really good salespeople, and that's their profession, right?
Yes.
And that's fine. But, if you're going to buy term insurance, maybe they're your person. But if you're saying, I want to design this specifically to accomplish X, or specifically so I can go and double dip on my money, you want somebody who actually gets it, does it themselves, and gets their clients to do it as well. And so,
right, and you're not going to find that everywhere.
Definitely not.
You are not going to find. So where do you look? Is there an organization that you can go to find a Chris Smile?
Well,
where do I go to find a strategic person, a strategic insurance person?
Yeah, you can. Well, you can look up infinite banking, right? You can always do that search, and you're going to find all kinds of stuff, right? Not to be so self-serving, but we actually
this is your opportunity to be self-serving, Chris.
Yeah.
I would be self-serving right now if I were you.
All right. Well, if you want more information, even how it works and with the numbers, on our website, moneyripples.com, you can actually go there, and we even have an infinite banking section with a YouTube playlist with various videos teaching about this deeper. And, of course, if you're saying, hey, we want to have it designed, you can always reach out to a company and do it that way. Worst case, you learn about it. If somebody knows how to do it, great. But I will tell you, 99% of insurance people have no clue how to do it, especially with that low-cost, higher returning type of infinite banking. It is so rare to find. And, in fact, I can tell you, we have 100% commitment that we will beat anybody's numbers out there. Anybody, even the ones that do very similar strategies and even do investing with it. Every single time we come toe-to-toe with them, apples to apples on a thing. And that's one thing you can do. You can even shop around. I encourage our people, hey, you have somebody else to shop with? Look at it, because we will beat them. And you will just know more that we'll beat it.
I love it. Chris Miles from Money Ripples, everyone. Thank you so much. Great job. Lots of information. I appreciate it very much. Thank you so much for being on the show.
Such a pleasure. Thanks.
Yep. Nice job.
Money Talk with Melanie features lively discussions of a wide range of global, domestic, and kitchen table financial topics. Money Talk with Melanie on 98.7 The Coast.
Welcome back to Money Talk with Melanie. I'm your host, Melanie Collette. And if you missed our first hour, you missed quite an informative one. We had cash flow expert Chris Miles of Money Ripples on, and he talked to us about the concept of infinite banking. And what it is the concept basically of strategic investing using whole life insurance policies. Just very interesting information, and it's not very difficult to do if you find yourself a very competent and strategic and creative insurance broker. And all of his information can be found online or in the first hour of the podcast, which should be able to be found sometime tomorrow on 98.7 The Coast's website or anywhere on my social media at Money Talk Mel on Twitter or at Money Talk with Melanie on Facebook. You should be able to find that information. Our second hour guest is cybersecurity expert Mike Fitzpatrick of the NCX Group. He's going to talk to us about how global uncertainty increases cyber attacks. And we're specifically really focused on the Russia cybersecurity threat and how that has really been increased for all of us because of the war in Ukraine and really because of American weakness on a number of fronts and how businesses and really individuals can protect themselves. I'm booked. My guest are booked out to May, believe it or not. And I actually, because of the news, which happens in the big time media, and we are big time here at Money Talk with Melanie, sometimes you have to switch things around because of the news. And I actually moved someone and put Mike Fitzpatrick here because I just thought the news was so pressing. So we'll have Mike up in a couple of minutes. But before we bring him on, I thought there were a couple of things that I just regular old newsy things that I wanted to talk to you guys about that were pressing on me. One thing that I ran into that spoke to me that I think a lot of people are dealing with. There's this thing going on in the employment realm called the Great Resignation, right? That has happened particularly since COVID. I think that COVID just caused people to think more deeply about their jobs and how they want to spend their time. People working from home, just kind of, and just the deaths from this virus that was going around. People just reevaluating things and deciding that, you know what, this I'm not doing something that I love, and things have to change. And I ran into this Money article, but it's about careers. And I ran into this article that said, these are the 5 biggest signs of a toxic workplace. I think the word toxic is overused these days. I got to be honest with you. But despite the fact that they use the word toxic, I think that I thought that this was an interesting article. I think a lot of times we don't even realize that what's going on with us is that we are exposing ourselves to some toxicity. And that's why we're so miserable. That's why we're sick all the time. That's why we're having issues, is because we're exposing ourselves to some toxic environment 8 hours a day. So what are some signs? Now I'm going to say this first one, I'm not feeling it, but I'm gonna go ahead and put it out here because it's in the article. Fine. I'll say it's from CNBC, so we'll do that qualification. It says, based on anonymous interviews, employees say the following 5 descriptions, I'm not going to go through the descriptions, I'm just going to tell you what they are textbook elements of toxic work culture. So the first one is being non-inclusive, eye roll. The eye roll's mine. And this, where members across gender, race, sexual identity, and orientation, disability, and age don't feel like they're treated fairly, welcomed, or included in key decisions. Now, I'm going to tell you why I roll my eyes. Because if I would literally never have had a job in my career if I based how well I did my job or considered a workplace toxic based on whether or not I felt welcomed based on my identity. Because literally every place I've ever worked, I've either been the only person of color or the only black person, like literally every place I've worked. I would say, with the exception of McDonald's when I was like 16. But since, like, every serious job that I've had since I was about 21, I've been the only black person at that job. So, like, if I had felt something negative because of that, I would probably have never worked. Now, the rest of these I can co-sign. People being disrespectful. Just everybody around you being disrespectful or lacking courtesy and consideration, and the dignity and your dignity. Just everybody around you. It said that researchers found that when you're not respected, that is the strongest predictor of how employees as a whole rated their culture when they were unhappy is that people were disrespectful around them. That was actually number 2. Unethical behavior was number 3. When organizations are dishonest and ignoring ethical standards. Number 4, cutthroat or backstabbing behavior and ruthless competition. And then 5th, abusive management, bullying, harassment, or hostility. Now, I find those things interesting, and maybe it's because I'm an older person. I like those, like cutthroat behavior, unethical behavior, and abusive management don't bother me as much, because at my age, when I run into that kind of stuff, I'm like, we can go. Let's go then. That's, when I was younger, that kind of behavior bothered me and would upset me. Now, it's like when somebody comes at me with a knife, I get my knife out and I'm like, come on. I'm like, bring it. So it's a different, it's a different kind of attitude. But that disrespect, woo, child, I can't deal with it. Now, another thing that came up, and I found this real interesting. I saw this article about this family feud, and this is just a life lesson. I want you all to think about this. And this article popped up, and the reason why I found it super interesting is because I happen to be teaching my classes right now about savings and investing strategies. And these 3 kids were given equal monetary gifts. And the dad said, I found this article in a Money Market magazine. And the dad said, you can either, gave them, let's just say it was $1,000. He didn't mention how much it was. But gave them equal monetary gifts. He said, you can have the cash, or I can invest it for you. But it's going to be the same amount of money to all 3 kids. Well, one kid wisely took the investment. The other 2 dodos took the cash, right? Well, as you might imagine, the 2 dodos who took the cash went out and bought expensive stuff. Not long-term thinkers, short-term thinkers, quick gratification. The long-term investor, the kid who took the stock, well, that kid's money just multiplied. Apparently, those other 2 kids never heard of oh gosh, I can't think of the term. Apparently, I never heard of it either. It's the term that has to do with simple interest. It's the other term. I can't believe I'm losing it. There's 2 types of interest. One is simple, and the other one, I'll think of it in a minute. Anyway, when you earn that kid's investment, they made a whole lot of money on the investment. Now the 2 other siblings are complaining and want the other kid who made a ton of money on their investment, want the other kid to give them some of their money. Crazy. Absolutely not. You chose to take the cash. You chose not to save and invest your money. You get nothing. And that was the advice that the person that they wrote to gave them as well. Because they were like, it was one of those like advice column type situations. And I was wondering if I was just being mean, like before I read what the response was. But when I read what the problem was, I was like, yeah, absolutely not. You didn't invest your money. You're dumb. And like, why would you not invest that money? Why would you blow that cash? Are you crazy? Yeah. That was just stupid. But word to the wise, if you get an opportunity to get a lump sum of money, oh my gosh, Mike Fitzpatrick, who will be up in like 1 minute because I'm about to do his bio and introduction. It said compound interest. I had a total I did total brain fart, and I couldn't think of the word. The word's compound interest. Yes, that's the word I was trying to think of. Compound interest. You're listening to Money Talk with Melanie. I'm your host, Melanie Collette. Will be back on the other side of the break with Mike Fitzpatrick of NCX Group.
Money Talk with Melanie features entrepreneurs, CEOs, and politicos who are experts in their fields. Money Talk with Melanie. Money Talk with Melanie on 98.7 The Coast.
And we're back to the second hour of Money Talk with Melanie. My guest this hour is cybersecurity expert Mike Fitzpatrick of NCX Group. He's going to talk to us about how global uncertainty increases cyber attacks. As the founder and CEO of NCX Group, he a successful information risk management firm. Mike Fitzpatrick has over 35 years of information technology experience, where he began addressing the technical needs and security concerns of businesses embracing the internet. Today, through his company, NCX Group, Fitzpatrick leads a team of highly skilled engineers and professional consultants who are dedicated to providing security assessments and innovative strategies that protect critical data and ensure a business environment remains operational. Among its clientele are companies from the Fortune 2000 to the Fortune 50 in the fields of finance, healthcare, energy, and education. If I told you who his clients were, I'd have to kill you. I'm just kidding. I added that part to his, that's not actually in his bio. And without further ado, Michael Fitzpatrick, how are you?
Hi, Melanie. How are you? I'm doing so much better that I'm talking to you.
You're doing much better than me. You could remember that interest upon interest is compound interest, and I could not remember, like, what? That word was not coming to me. Like, it just was not happening.
Think back to the old Boy Scout, Eagle Scout requirement for personal finance. So it's all in there in the Boy Scout stuff.
I only teach it every day, all day. I only talk about it every day, all day. And that word compound interest was just not happening. It was not coming.
You know, it's going to be, it's a whole interesting discussion. I listened to the first hour and it was interesting. I mean, it's, with everything going on and the uncertainty, you know, with what is happening as a result of Russia and Ukraine. And, you know, I've got my own, you know, concerns from the standpoint that, okay, is this blunt force trauma, or is this a diversion to something else? Because some of it just doesn't make a whole lot of sense,
right?
From my perspective. So, you know, go back to Sun Tzu, Art of War, right? Deception. You know, so what is there to actually gain out of this at the end of the day? That's the part that keep going through my head. It's not necessarily as evident as it may appear in my mind, anyway.
For sure. So before we get into the meat of what we wanted to talk about, I have a clip that I wanted to play about the main reason why I have you on the show tonight. The president, a couple weeks ago, warned us about a cyber attack. It's clip one.
Look, today my administration is issuing new warnings that based on evolving intelligence, Russia may be planning a cyber attack against us. And as I said, the magnitude of Russia's cyber capacity is fairly consequential, and it's coming. The federal government is doing its part to get ready, but under U.S. law, as you all remember, the private sector, all of you, largely decides the protections that you will or will not take in order to protect your sources. But let me be absolutely clear about something. It's not just in your interest that are at stake when there's potential use of cybersecurity. It is the national interest at stake. And I would respectfully suggest it's a patriotic obligation for you to invest as much as you can in making sure, and we will help in any way, that you have built up your technological capacity to deal with cyber attacks.
So that was President Biden, Michael, telling the United States, I guess corporations, I don't know. It was hard for me to ascertain from that clip if he was talking to us as individuals, just major corporations. Was he telling, cybersecurity CEOs of cybersecurity companies like yourself to ratchet up your business and reach out to people? Like, who was he? Who do you think he was talking to there?
Honestly, I think it was a healthy statement from the standpoint that, one of the things that we've seen over the years, the Chinese government, the Chinese government has been mapping everyone's network across the board for the last 15 years, regardless of the type of business, regardless of what you do. We've seen it happening within critical infrastructure. We've seen it all the way to somebody that's a print shop, for that matter. So they've mapped every business and every network to understand where resources are. So this has been game planned out for a long time. It's, I go back through the articles that we have written over the years, over the last 5 years, 10 years. We're still writing about the same things. And in a lot of respects, compliance has made cybersecurity more complex and more difficult to achieve. It's also made it more expensive to achieve. We're now getting to a point with small businesses to where cybersecurity is being priced out of possibility, given the fact that, when you look at hourly rates for expertise and people to help guide you through this, it's not cheap. So with the shortage of personnel in cybersecurity, that price keeps going higher and higher. So my concern is small business and trying to get them to understand what it is that they can lose, which is everything. So it's great that the president said something positive in that respect. It's great that CISA is going through and warning people, even though I still have some issues with CISA.
What's CISA?
CISA is the federal government's cybersecurity branch of Homeland Security.
Okay.
So CISA, they were the ones that said all the elections were 100% safe, and then the next thing you know, there was a supply chain breach with SolarWinds and with Microsoft and a couple of others, right? So they said the elections were safe, but then again, they missed the whole thing in the supply chain. So it's one of those things. You can't be perfect all the time. We have to be right 100% of the time.
Sure.
Bad guys just have to be right once.
Right. That's exactly right. I mean, the last conversation we had when we were talking about this show tonight was, I think the conversation I had was, I was like, dude, where do I put my money? Like, remember that? I was like, we were talking about, I was like, so, hey, Mike, Russia, cyberattacks, banks, where do you think I should put my money?
Well, in this under the bed.
Right? I was like, I think I said that to you. I said, I'm looking at my mattress right now. Like, what?
Oh, I gotta tell you, the thing that's, and I've talked to you about this before, there's a really interesting book out there in cyber warfare. Quite frankly, everybody can understand it. It's really well written. It's all fact-based. These are real events. But it's the name of the book is called Sandworm, and it's about the first malware that was used in critical infrastructure, water, power, gas, those types of things. And it was first used on an attack on the Ukraine power grid out of Russia.
Well,
And so,
here's the thing. We don't have to worry about that because Biden gave Putin a handy-dandy list of off-limit of infrastructure entities that were off-limits for cyber attacks. So, Putin has the list, so I'm sure he's not going to attack any of those things. So we don't have to worry.
well, the thing is, I mean, there's very talented hackers and cybersecurity people and IT people in both countries, Russia and Ukraine. Ukraine has reached out to the hacker community very aggressively to help in their efforts to defend themselves from Russia. So we've even heard the federal government talk about the fact that their defensive capabilities, our defensive capabilities, are not as good as some others. So we would take a very offensive stance if something was to take place, if there was an attack launched.
Wait. Stop. Hold on. Did you just say... Okay, I want to make sure that I understand what you just said. Did you just say that we are not very good defensively? So but we're really good at attacking back.
We have offensive weapons that have not been used because there's a certain line that you just don't want to cross, right? There's no rules that regulate cyber warfare. There's no treaties. There's no nothing. That's going to be the wild, wild west. So it's a line that no one really wants to cross because everybody has capabilities. So it's going to be interesting to see how this plays out. But like I said, this book Sandworm is really interesting from the standpoint of how Ukraine has been used by both nations, Russia and the United States. And the technology that is used in this malware was used on a global cyber attack back in 2017 with NotPetya, when it took down hospitals in the UK, it took down FedEx, it took down the global devastation in a matter of hours was unbelievable. So that's the basis of all malware is Sandworm. Now, the fun fact is the guy called it Sandworm because he's a Dune fan.
Really?
Yep.
These people are always such weirdos. Like, it's always something weird. Is it me? Like, it's always something weird.
Well, most servers, most server environments are named after some type of sci-fi thing.
Right.
So it's interesting, when you go in, you see the server names. So
it's always something weird. Okay, so all right. So so you say that there's no rules, like there's rules, like the rules are being followed in regular war. Like Russia in Ukraine right now are doing I guess they don't call it a regular war, but they're doing a regular, kill each other war. But Russia's not following the rules. Whatever the rules are, like they're killing kids and civilians over there.
Well,
so what makes us think that they're going to follow the rules in cyber warfare?
Well, and I'm sure the number of attacks have escalated greatly over the last year. Ransomware specifically has gone through the roof. First 6 months of 2021, there was a 100%, 150% increase in the number of ransomware attacks.
Right. Now, explain what a ransomware attack is as opposed to a malware attack. Because I think that people... I might be wrong, but I think that people kind of conflate all the different types of cyber attacks and don't really make a distinction between what they are.
Okay, so a ransomware attack is typically with malware, and the malware is used to assemble the attack that is used, and that attack will basically go through and encrypt all of the files on your computer, making it worthless.
Nice.
So then they reach out to you through the little window that they've left and says, if you'd like your data back, it's going to cost you X amount of Bitcoins. Now, they have the keys. Encryption requires keys. So if you don't pay, you've got basically two choices. One, pay the ransom, get your data back probably about 45% of the time. If you don't want to pay it, make sure you have incredible backups, and that you've tested them, and you make sure that the malware is not buried in your backup somewhere. Oh. And if that's the case, then go ahead and, re-image your computer or servers or whatever the case may be. And it's going to take time to get back up. Typically, when somebody gets hit with ransomware, it is 2 to 3 weeks and then maybe 6 months worth of cleanup afterwards.
Ugh.
It's not easy. So it's best, and this is one of the things, and we just did a post on this, and it's on the website on ncxgroup.com in our blog section. And it's flat out. It's time to prepare. Global uncertainty increases cybersecurity. So the question is, what do you do? The first thing is go through and patch everything. Patch your operating systems, patch your other systems that you have, make sure you're at the current levels, make sure that you have shut every door and window from an OS standpoint on your laptops, on your computers, on your mobile devices, on your servers, and on your firewall OSs. Make sure that is up to date. There was a recent breach back in December where SonicWall, which is the firewall of choice for most small businesses, there was a vulnerability in their operating system, and it was used to exfiltrate data out of people's environments, companies' environments. Again, it wasn't patched, it wasn't up to date, and the bad guys are able to exploit these things.
Jeez. Okay, so let me ask you this.
Yeah.
Is there a type of company? I have a two-part. We have 3 minutes. I was just given a 3-minute signal, and of course, I have this super deep question. So it's always the way. Is there a kind? Always the way. Yes. Is there a kind of company that is more? Oh, I'm going to save my other question for the other side. That's like a more likely target than others, like from Russia, from a bad, state actor, like a Russia, like during a wartime, such as this.
Well, what I would be concerned about, what I would be most concerned about, is critical infrastructure, power, electric, gas, water, right? Those are all SCADA control systems, so those all those are all mechanical systems, supposedly not connected to the internet, but they seem to work their way around them. You have a lot of those systems that, there's 3,000 power companies in the United States. Do you know how many of those companies have actually conducted a cybersecurity assessment?
Oh, how many?
2.
What do you mean? What do you mean 2?
2.
As in the number 2?
I mean
2 as in 1, 2, like Sesame Street, 1, 2?
Yes. Now, that detail is from a friend of mine by the name of Joe Weiss, who is the foremost authority in the world on cybersecurity for critical infrastructure.
Didn't the president just stand up there the other day and say they were all over it? Is that their idea of being all over it? 2 companies have done assessments?
Melanie, if they were really concerned about it, they would have been building, things to withstand EMPs.
Oh my God! Let's not. You and I have been talking about EMPs for like 5 years.
So again, the reality is there's the reality of what comes out of a politician's mouth. And then there's the reality of what it really is.
Yes, this is true. We have to go to a break.
Just because a politician says it doesn't make it so.
We're so aware of that. We're talking to Mike Fitzpatrick of NCX Group. We're talking about how global uncertainty increases cyber attacks. Yikes. We'll be back on the other side of the break.
Money Talk with Melanie. Money Talk with Melanie. Thursdays, 7 to 9 p.m. Eastern Time on 98.7 The Coast.
Welcome back to Money Talk with Melanie. We're speaking to Mike Fitzpatrick of NCX Group. We're talking to him about how global uncertainty increases cyber attacks. And we were just talking about really the vulnerability of the United States infrastructure to cyber attacks, not only from Russia, but also China was mentioned earlier. Russia is obviously in the forefront of our minds because of the war in Ukraine, and because they've been in the news here recently. But I mean, it's frightening how unprepared we are, despite the fact that it's being talked about by the FBI, and it doesn't seem to be like super. I guess they don't want to scare the American people, like as if the Biden administration's not frightening enough. But it's just, I don't know if you saw that the White House released a fact sheet on, what date was this? This was on March, I want to say 21st. I was going to say 22nd. On how to protect against potential cyber attacks. Did you see this, Mike?
No, I haven't. I heard about it. We've been so slammed. It's amazing.
I'll bet you have.
Good. It's amazing how good an armed conflict is for cybersecurity these days.
I'll bet it is.
Yeah, no, people are starting to pay attention. You know, CISA has done a lot in trying to share basic cyber hygiene. Right? What are the things that you should be doing?
Right.
You know, a lot of times, and you said it in the last comment about President Biden and talking about having the right technology. The problem is, and we've talked about this before, the problem is cybersecurity is really three components. It is people, process, and then technology. You use the technology to manage people and process. Mm-hmm. Technology will never, ever, ever be the silver bullet in this. Never. It's only 1/3 of the equation.
Sure, because a lot of it is how people handle the technology.
Well, it's the technology, but it's also the stuff that you do as far as training your people from a cybersecurity awareness standpoint. It's how you develop your processes within your business related to what your business is going to tolerate from a cybersecurity standpoint. What kind of accountability do you have? What is the DNA of cybersecurity within your organization? Is upper management all in on it, or are they paying it lip service? Because there's a lot of CEOs that pay it lip service. They think it's too expensive, and they don't have the time to deal with it because they need to be nimble. Well, you can still be nimble, and you can still make your business secure. Matter of fact, if you do cybersecurity right, you will grow revenues.
Oh, for sure. But, you know, that is with so many things in so many organizations. So many management structures are reactive. Like, yes. they don't do anything until something really bad happens. Like,
without a doubt. And now here we are coming off of a pandemic. In most cases, a hybrid workforce, right?
Right.
So you have people in and out of the office left and right. So as Hitler learned from World War II, it is really difficult to fight a war on two fronts. it's the same thing in cybersecurity. It's one thing to do something nobody had ever done before. And that was, okay, we've got to move all our operations to the cloud. We got to move everything to remote work. And, oh, by the way, we don't know how long that's going to last.
Right.
Well, it happened to be 2 years.
Right. And did anybody
no one
say
had a plan for that?
Right. Nobody had a plan for it. I don't know about any place that anyone else works. One email about cybersecurity and information safety?
Well, how about the fact that maybe now company data is on Timmy's computer that he uses for gaming at home, right? It's the family computer?
Yeah, sure. I mean, I live by myself, so it's safe at my house, but I don't know.
Timmy goes ahead and clicks on a great email about a game, and it happens to launch malware, and it now it's been hit with ransomware.
Right.
And now all the company data has been exposed.
Right.
So again, we've dealt with that, and now we're having to try to secure a hybrid work model. And you mentioned in the previous hour, the Great Resignation. Guess what? Nobody's businesses would have functioned without IT people.
Absolutely not.
Hospitals wouldn't have gotten supplies. Logistics never would have worked. Shipping never would have worked. Amazon never would have worked. All of it never would have worked without IT people working ungodly hours. Guess what? IT people are now walking away from these high-paying jobs because they've had it.
I think a lot of people are walking away from a lot of jobs because it's not worth it. You get and it's not about the money anymore. No one cares. Literally no one cares about the money. No one cares.
No, it is getting to that point, and so you've got a lot of really experienced people in IT and cybersecurity. They said, "Heck with it! I'm moving to the mountains. I've got a cabin up there. I'm going to teach rafting."
Yep. And I think that many people have discovered that you can do things online. Yes. Like, you can do things online. So I jokingly, I don't know if you saw the post, I jokingly said that I was going to start an OnlyFans, only when you click on it, I'm wearing a suit and I teach you Excel. Right?
I did see that, actually.
Right. So people were like, you could actually do that. Like, people have OnlyFans for cooking and stuff like that. Like, you should do it. Right? So, and a few people were like, I would totally sign up. And by the way, would you teach QuickBooks? And I'm like, what? And I'm like, wait, I might have to do that as a little summer project and see how it turns out. I don't know. Yeah. So, people, I think entrepreneurship is way up as a result. And who do you need? You need IT people. You need cybersecurity people. Like, you guys are set for life.
Well, we're set for right now. Everything goes in cycles, right? Everything goes in cycles. We've got an unusual situation right now. And so the biggest thing that small business or any of the businesses can do is improve their cyber hygiene, right? I mean, it comes down to, securing your operating system and your computers, enable multi-factor authentication on your devices, on your Office 365. The easiest way and the way that people are getting in is in leaked credentials, leaked passwords. So the hackers are no longer just, ripping down doors and walking in. They're using your passwords.
What do you mean? What do you mean by leaked credentials? How do your credentials get leaked?
So let's say Amazon had a breach. Not that Amazon had a breach.
Okay.
So they have it. I'm using that as a reference for Melanie because she loves Amazon.
Okay, this is not wrong. This is not incorrect. Got a package yesterday, and what I don't understand is my confused look. The confused look on my face when I pull up and see Amazon packages on my doorstep, like I did the last 2 days, when I know good and well I was just on the app. I don't understand why I look so confused because
You've forgotten what you ordered. That's
right, and I literally have no idea what's in those boxes.
So let's say that there was a breach, right? Your credentials end up out on the dark web, where they can be purchased. That's your username and password.
Right.
So now they can just log in as you. Now, what most people do is they will reuse the same password time and time and time again.
Uh-huh.
So what they do is they start going through the obvious things to see, okay, let's see, is Melanie on Netflix? Yes. Is Melanie here? Yes. Is she using the same password? Yes.
Yeah.
So
probably.
So these are the things that people have to think about. One of the best things people can do is get a password manager. One of the ones that I like is Keeper.
Yeah, how many times are you going to tell me this before I listen?
Yeah, so, I mean, it's great. I mean, I've got 130 different passwords for things. And now I've bumped everything to 20 or 25 characters. Now, the only way to do that is to use something like a password manager that random generates your passwords. So anything that's 8 characters or less than 12 really these days is suspect.
It's no longer safe. So 8 characters is not a lot at all.
No, and I mean, what was I saw a chart on this. 8 characters can be broken within 3 minutes.
What, with like some kind of computer app or something?
Yeah, with a password cracker, one like we
use.
A
password cracker?
Yes, ma'am.
Ah, Mike, come on, man. You're never like the bearer of good news.
I try to tell people how to make it better.
You do.
I try.
You do. So, okay. So, all right. So let me ask you this. So, yeah. All right. So Russia is concentrating probably on the big stuff, right? Like infrastructure. I would think finance, right? Like, because, okay, if you want to take down America, right, you're probably focused on some financial stuff, too. Probably the interwebs, right?
Well, the big thing that you're looking at, I mean, there was an article I saw the other day that China has rerouted most of the Internet in the United States at different times recently. So that, to where it all goes through China. So
that's lovely.
So what I'm most concerned about is critical infrastructure. So if you take down power, right? So what isn't going to work without power?
Well, the internet won't work without power. And then how am I going to order from Amazon? Like, let's focus on what's important here. and your bank won't work either. Well, yeah. That's a whole problem.
So the other thing that won't work eventually is your water supply.
Well, that's obviously a huge problem.
Because the pumps within the water treatment facilities and the water companies need power.
That's right.
So Russia was the first to use a cyber weapon with Georgia, where they went in and took out the power grid before they rolled tanks. They didn't do that in Ukraine this time, which is one thing I find interesting.
Oh, my gosh. So so we have to rely on the government to protect us from that. Like, there's nothing that I can do.
No. You're relying on 3,000 different power companies to do that.
That's great. And the government, like, I'm definitely not pro regulation. But all the regulations that the government has, there's no regulations that require power companies and water companies to do cybersecurity checks on periodically.
Well, they're starting to do these things. It's all a surprise to them. I mean, one of the things I found really interesting is with the CARES money that went out to schools, right?
Yeah.
And with schools, what is it, the HERS Fund? Anyway, to support education. They have all kinds of money for technology, for one-time technology improvements, for student learning, for distance learning, all of those things.
Yeah.
They included no money for cybersecurity professionals to actually help them design the right solutions. So it was all about selling technology. And again, like we said, 33% of the problem is technology. 66% has nothing to do with technology. Yeah, you can have the right technology installed, and I can still beat it. Just by talking my way in.
I am shocked that public entities don't have more of a cybersecurity issue. Just because I deal with so many public entities. Like, I find it shocking.
Well, I can tell you about a water district out here, the land of the $6.50 a gallon gasoline.
Yeah, congratulations on that.
It's impressive, isn't it? We should be at $7 before the end of April.
Gavin Newsom's done a great job. Just really good job, California.
Just fantastic. So, so the water district that we've worked with before called us up. I think it was 2 years ago, and Jeff says, "Hey, we need to get a cybersecurity assessment." I said, "Okay, great." I said, "When did you guys do your last one?" And he said, "Well, the last one we did was the one you did." And I said, and I had to go back and look, and I said, "Jeff, that was 2010.
Wow.
So it was 10 years.
Oh, geez.
So there was nothing requiring them to do it on a frequency basis. Now, they are trying to get better. They're starting to, there's plans that have been now put in place. There's things that the government is now starting to require, and that's all good. I don't want to be the bearer of bad news. The bad news is they could have done this a long time ago and didn't, and chose not to, because they thought it would be burdensome to public entities.
Oh, but listen, thank God they took care of the whole hair discrimination thing. I know I sleep better at night knowing that they can't discriminate against me because of my hairstyle. But I may not have water in the morning. So listen, the government
It's a give and take.
Government always prioritizing, taking care of the important things, making sure that everything is taken care of and prioritized properly. Where can
I mean, there's a lot of administrations that could have tackled this that didn't.
That is true. And folks, if you don't know the legislation that I'm referring to, you just look it up. Recent legislation's been passed to make sure that people are not discriminated against because of their hairstyle. Very important. But in the meantime, Mike Fitzpatrick, where can people find you, avail themselves of your very important services, because cybersecurity is really important for everyone and every business to take advantage of.
Melanie, thanks for bringing me in and giving a chance to talk to people about this. I mean, if you do have a business out there, really, cyber hygiene, basic cyber hygiene right now is the most critical thing that you can do. And if you would like to see that blog post along with others on our site that we've been working on recently to really provide some guidance to people, just go to ncxgroup.com, and that's N as in Nancy, C as in Charlie, X as in X-ray, group.com. And that is the easiest place to get in touch with us. All of our social is ncxgroup.com on Facebook, Twitter. That's about it.
Excellent. Always very good information, Mike Fitzpatrick. Thank you so much for coming on the show this evening. You absolutely rock, as usual.
Always a pleasure.
You're the best. Thanks so much. That was Mike Fitzpatrick, ladies and gentlemen. I also want to thank Chris Miles from the first hour. If you missed that, make sure you listen to the podcast, which will be posted sometime tomorrow on 98.7 The Coast's website in the podcast section. He talked to us about infinite banking. Make sure you check me out on Newsmax this coming Monday, on American Agenda at 3:30. Also, on next week's show, we will have Sam Liebman. He's the founder and CEO of Wealthway Equity Group. He's going to talk to us about how Harvard can't teach you what you learn from the streets. And then the second hour, we will have Derek Bullen. He is the founder and CEO of SI Systems. He'll talk to us about In Defense of Wealth. Remember, this is all very important because it's your money.